All right, so this is going to be our support and resistance cluster chart build out. The purpose of this video is to show you how to uh, identify and label and build out a chart with these support and resistance clusters. This is going to be um, a video that probably takes a little bit longer to get through, but that's okay. If you use the Sistine Research indicators or other indicators to find support and resistance levels, I feel like this is going to be a very helpful video for you. This is uh, how I trade profitably using these support and resistance clusters. Right, my strategy basically boils down to farming the multiple bounces on these strong confluent levels over and over and over again, and it can be quite profitable when you find really strong support and resistance clusters. So, without further ado, let's jump into Dogecoin. So, I've been trading predominantly Solana. Based off of these support and resistance levels. But we are going to build out the Dogecoin chart from scratch in this video. Again, it's probably going to take a while. There's probably going to be plenty of awkward pauses where I'm just searching for levels. But hopefully, if you take the time to watch this video in its entirety, you will see how we can derive these support and resistance clusters and use them to trade profitably. All right, so first things first, let's get rid of that guy. We want our long, short, and our long and short margin pressure levels, our risk reward indicators. Once you get these at Sistine.ai, within 24 hours, we'll add you to the scripts, and you'll find them in our invite-only scripts section. You may have to refresh trading view once we add them for you. Okay, so first things first with Dogecoin here, we want to pretty much be focusing on this chunk of price action here. And that's just because we've got enough volatility and local highs and local lows to run some margin pressure levels off of. We can run some off of this chunk of price action, but what you'll find is most of them are going to generate levels that are up here. So it's not that useful for the immediate shorter term price action. All right, so starting with the last video that we did, let's take a look at our price bias levels. So all I did there is I grabbed this horizontal level tool, horizontal line tool. I want to look for our price bias levels first, and then we'll introduce our indicators. These are the easiest levels. They're strong levels. I'm going to go with a dark color to color code this. I am going to label this first one 10 cents. And this is going to be, I'm going to label it PBL. So I'm going to double click on the horizontal line here. I am going to go to the text. I personally like to keep my, in the style here, I like to keep it on the thinnest possible one because it gets pretty crowded. But on the text, you can see here, 10 cents price bias level. And I'm going to put that at exactly 10 cents in terms of the coordinates. So I'm going to go to coordinates, put in 10 cents. You can already see, look, 10 cents is a support and resistance level that we've interacted with in the past. Need a drink of water there. All right, let's go to 15 cents. We're going to do the exact same thing for 15 cents. And what do you know? Pretty decent support and resistance level. Now I need to label it. And again, guys, cannot reiterate enough. This is going to be a long video. 0.5 cents. 5 cents rather. And what do you know? Once again, a really important support and resistance level. So we've got 5 cents, 10 cents, 15 cents. We might as well, while we're at it here, we might as well throw in 20 cents and probably 25 cents as well. Just so we have our bases covered for the foreseeable future. Also, I will be sharing this video in the research, or not this video, this chart build, this Dogecoin chart build, I will be sharing in the Sistine Research website. So I'll copy a link to it so you don't have to build it out for yourself. Though you can use the same methodology to build out support and resistance clusters for any. Let's also put 7.5 for any asset. 7.5 cents has been, it's not as strong of a level, but it has been an important level, and it is a price bias level. You can kind of see how we've interacted with that. pertinent to put that just because that's where the price action mostly is right now. Okay, we're gonna grab another horizontal level. I'm going to color code this. We could do blue or pink. I'm gonna do like this kind of purplish color. I'm gonna label it a risk reward level. Then we're gonna get out our risk reward indicator. And we're gonna run this risk reward range, and we've done a tutorial on this, so go a couple videos back if you want to see the tutorial on how to run these levels. We're just grabbing our low and our high, and we're going to start putting these levels in. So we've got a risk reward level in parentheses. I'm going to put so first I'm going to put our 3-to-1 risk reward first. I'm going to put our low here. Actually, I'm not even for the sake of this video, so it doesn't take too long. Normally, I would just label this with the low and the high that we're taking this risk reward bundle off of. But I'm just going to put in 3-to-1 risk reward. I'll go back through and label these at some point later, but I don't want to make the video too long. We can see our 3-to-1 risk reward level here off to the side is at 0.07659. So we're just going to point 0.07659. And we've got our 3-to-1 risk reward level, and I'm just going to copy and paste that. I'm going to edit it to be our 2-to-1 risk reward level. Again, normally I would label these highs and lows in here, but I don't have all the time in the world. 8574. Now we've got our 2-to-1 risk reward level coded in. Now simply we'll go call this our 1-to-1. Our coordinates are going to be 10, 404. Now look at the support and resistance that we're seeing off of that 10.4 cent level. So our 10 cent price bias level coupled with our 10.4 cent 1-to-1 risk reward level has actually acted as pretty strong resistance in the past. So if we start moving back up to this range, we kind of have an idea of where our range highs lie. We're going to call this one our 2-to-1, even though it's our 2-to-1 short level. We'll just call it our 2-to-1. That's going to be 12.233. And normally I would run, let's go 13148. And we'll call this our 3-to-1. Now, normally what I would be doing here is I'd be running multiple sets of risk reward levels. I'd be doing this. I'd be going all the way up to our all-time high. I'd be running these levels. I'd be dragging these around to multiple highs and lows so that we can get more levels, right? So we want to, find clusters essentially. For Dogecoin, the most obvious one is just this most recent swing low, bear market low to swing high. That's what we're going to be basing the majority of our, range off of. And for the sake of this video, I'm not going to go through all of these swing highs and swing lows. But this should suffice for now. And we can already see we've got a chart here that's starting to be built out. We can see, hey, we've got some resistance up here if we were to move back into this region, right? And that matches up with, prior support and resistance from before we dropped off into this bear market or deeper into this bear market. Okay, now what I'm going to do is I'm going to copy this blue level. I'm going to make it red. And I'm going to call it our short MPL. I am going to label these. All right, so actually I made the text red. I don't want to make the text red. I want to make the actual line red. There we go. All right, so we've got this short margin pressure level. I'm just going to drag it up and out of the way for now. And I'm going to put on our short margin pressure levels tool. And I'm going to use this most recent swing high. Okay. So first of all, we've got our 1x short margin pressure level. So I'm going to put 1x short margin pressure level. I'm going to put the root. I'm just going to denote that by putting R:. Our root is this. It says short low. That's just an error in the indicator. The indicator this should be our local high, not our local low. But that's, I'll find some time to go in and fix that. 15.893. 0.15893. I'm gonna put, that's fine. That's the root. That's where our high for this margin pressure level is. So basically, once we drag this into place, or we'll put in the coordinates, Here we see our 1x short margin pressure level. Put our coordinates 0.07946. Now that's in place. We have it labeled, so we'll always know that this is within reference to this 15.8 cent high. All right, now we're going to take this. We're going to label this one our 2x short margin pressure level. It's still off of the same root or the same local high. It is going to be 10.595. And already, so this is very clearly our range high kind of resistance cluster, right? This is where we want to be looking if Elon Musk makes a tweet tomorrow about Dogecoin and we start running up. That's where we want to be looking for short positions. Or if we're in a long position, this is where we want to be looking to take profits, right? Somewhere in this region. Why? Because we have 3 margin pressure levels, or 3. We have a support and resistance cluster rather. All right, so now we're just going to continue onwards and upwards towards our 3x long margin pressure level. 3x long margin pressure level. I'm seeing 1192. Boom. Okay. All right, and then the 4, 5, and 10x levels, they do start to get a little bit crowded and tenuous to put these in, but we're just going to press forwards. 0.12714. You guys should be getting the idea here by now. We're going to put this in as our 5x. Our coordinates for our 5x is 0.13244. And last but not least is going to be our 10x. Which is going to be 14448. And our text here is going to be 10x short margin pressure level. All right, then when I remove these short margin pressure levels, we've got all our short margin pressure levels in. This is an interesting area already, right? This kind of cluster here, this cluster here. And then should we start moving up into this region, we've got plenty of resistance up here. All right, let's throw in our long margin pressure levels. Now, again, we can run these off of multiple lows. We're going to go with our bear market low to begin with. But one thing that we may want to take into consideration, and I'll get rid of that 25x level. We don't need that. One thing we may want to take into consideration is running off of our most recent swing lows as well. And this, for the sake of this video, I'm only going to run one set of margin pressure levels. But you can see already, hey, that's giving us confluence here. Right, that's giving us another level there. Oh, whoops, sorry. I was on the wrong wick. You do want to make sure you're on the right wicks. This gives us, a level that's close to our previous high, right? And what that also means, for those of you who can kind of see it already and you're familiar with the margin pressure levels, if we were going to throw in our short margin pressure levels, and this is why it's worth running these off of all these highs and then finding the clusters, is look, off of our most recent swing high, where did this correction come down to? It came down to our 2x short margin pressure level, right? And we kind of just reclaimed our 3x short. We're kind of trying to push through and onwards and upwards here. But this was a very key support level off of the most recent swing high. It kind of gave a pretty good idea of where we would find some support here. So going back to our long margin pressure levels, we're going to throw this off of the bear market low. Let's make sure we've got the wick. All right, so we're already starting to see, hey, this is adding more resistance just short of 10 cents. So lots of resistance here. It's adding more resistance here. So now we're starting to get 3 levels in this region, right? And you can kind of see where price action popped up, right? Found some support, and then that was the short trigger right there, failing this level, right? Okay, so very simple and straightforward process. I'll just copy and paste one of these horizontal levels. I'm going to change it to be green. We'll just go with that shade. That's fine. Text, we're going to put 10x long MPL root. It's going to 0.04914. Then we are going to put the coordinates in for our 10x short margin pressure level, 0.0546. Boom. All right, that's in. I'm going to copy and paste that. Put that in at our 5x. 5x coordinates are going to be 0.06143. It's good to go. Put this in on our 4x. Whoops. Actually, I lost it. There we go. 5x level. I must have typed in the coordinates wrong. 0.0614. Now we're in place. Now I'll copy and paste that. That's going to be our 4x long margin pressure level. Coordinates for our 4x long margin pressure level is 0.06552. All right, that's in. Our 3x coordinates are 0.7371. 3x long margin pressure level, almost done, guys. 2x long margin pressure level. And this is obviously a pretty important one because the lower the leverage margin pressure level, so 2x and 3x are going to be stronger than the rest. And this is also coming in an area of confluence that we need to pay attention to. So like 10 cents for Doge is kind of the range, is capping the range. Now we deviated above that, but you have to keep in mind, like the reason we deviated above that was because Elon changed the logo, the Twitter logo, to the Dogecoin. Whoops, I'm not supposed to be changing the root here. I'm supposed to be changing the coordinates. Changed it to the Dogecoin logo. So of course, some of your support and resistance in the short term can be overridden by a short term, hype pump. All right, then we'll get rid of our long and short margin pressure levels. All right, so even just doing one set of each of these, where we found our price bias levels, we found our one set of risk reward levels, we found one set of margin pressure levels, and we found one set each of short and long margin pressure levels. Great. Now we can already see, these highlighted regions of, hey, Dogecoin gets up here, we probably want to be looking for shorts or closing our longs, right? Even here, Dogecoin is going to probably have a lot of trouble pushing through the 7.5 cent region, right? And the way we can, structure trades based off of this, it's, we can come in and we can look for, whoops, there we go. You can look for level to level shorts. Right? You can structure, hey, if this comes up to 10 cents, I'm going to short 10 cents. I'm going to put my stop loss up here above this 2x short margin pressure level. That's at 10.4 cents. And I'm going to target, let's say, we'll target 7.5 cents. Right? And you can see like, hey, that's going to give you pretty good risk reward. And maybe this is your first take profit, right? And then this is, your second take profit, and this is your third take profit. Right? You can structure a trade like that. Now, I'm not saying this is the greatest trade setup ever. And there's going to be certain charts that just give us cleaner levels and more, like we want these as tight as possible. So the thing with Dogecoin here is these aren't super tight confluence bands. These aren't super tight confluence clusters. Still very tradable, still fine. But some charts, when you do this process for, you're going to find like certain levels that are just super, super strong. When you find those super strong levels, you can, trade with a higher degree of confidence. So guys, I hope this video was helpful. If it was, like, subscribe. If you want access to these indicators, go check out, and you don't have them yet, go check out Sistine.ai. Again, like I mentioned, we'd be, ideally running long margin pressure levels off of, these lows, short margin pressure levels off of these highs. Maybe some additional risk reward levels, and then putting in the ones that, give us additional confluence. So just keep that in mind, and hope this kind of build out shows you how I personally, build out my charts for trading. Thanks so much. Catch you next time. Peace.